Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Wednesday, November the 18th. The year's 2020. Let's talk trading. To trade or not to trade? When I woke up this morning and I turned on the trading platform, it was about 5 a.m. Before I get too much further into this, let me just remind you these videos are for educational purposes only, and your results may differ from mine. And I looked at the chart, and at the time, the range on the pound was under 60 pips for the day. And 5 o'clock my time's 8 o'clock New York time, which is well into the London session. Price just hadn't moved. So I had some other things coming up, and I just decided not to trade. I mean, yes, you can make pips when the range is only 60 pips. No doubt about it. You can, make 2, 3, 4, 5 pip trades, maybe even 10 or 20 pip trades if your timing's right and your direction is right. Um, but it just appeared to be one of those days where why push it? Yesterday was a very tight range day. Let me pull up the a chart here so you can see what I'm talking about here. Right here. Today, right now, we've got 73 pip range. Yesterday was 89, and the day before was 82. Just compressed ranges. You can see 4 days ago we had 122, and that's only in the 60 percentile. Now, what did I just say? You could have easily taken the 90 wall mall trade and picked up 5 pips or so. So it's still possible to trade these days, but I just looked at it and I just didn't like it. It was just, like I said, highly compressed. But here's a 10 pip or more wall mall trade. Here's a couple of fives. But just for the overall day, it just was too compressed for me. And so that's just part of knowing yourself. Plus, it had already cracked through the high of the previous day. And so it was sitting up here. And to me, it's like, well, no. I just said no. So that's just something that you have to take into consideration sometimes. It's okay not to trade based on whatever you see or don't see. Um, yes, there's traders out there trading and they're making pips, and there's some traders out there trading right now, they're losing pips. I just decided to stand aside today. Um, and also, maybe it's because today's day one of Oregon shutdown. Our governors decided to shut down the state because of the coronavirus, but that's just an aside. And you can see here it broke out of the opening range for the year right here. We're 117 pips above the weekly open. We're 39 above the yearly open. Right here, we crossed above that yearly open. We crossed above the opening range for the week. And so you can see there were some very nice breakout trades to be had. So once again, could have been a nice trading day, but with the range, I just didn't like what I was seeing. Once again, 39 pips above the yearly open. Nice breakout of that inside bar. Once again, a lot of monthly inside bars, not so much on the day and week. 73 pip range. So it expanded 13 pips since I've been watching. I think when I first got up, price was somewhere, I think around 80 or so. And then it moved up about 30 pips. So it did add to that range. But only 3 pips over 100. Markets are just tightening up. Nice H1 break there on the to the bottom. You see it broke out of that previous hour's low. You can consider that a rat reversal type trade. You could have taken a trade here when it recovered that previous green candle. There was another trade to be had. So there were trades to be had and trades out of the rat zone. You can see on the buy zone here, the pivot point was right here. So if you were fading the pivot, you can see we missed that pivot, but we never even got a signal. But that signal was within the zone, so it was a no signal. You could have taken the buy zone trades if you're not using the pivot as a bias. Rat trading here, as you can see, a nice move out. So the red rats feasted. And I think there was a trader who was asking me about semaphore trading. So let's just flip through the charts. Once again, pivot missed. Weekly, I believe we covered it already. Pivot point travel, you can see once again we missed it on the price travel analyzer, which, if you're wondering, is a 2017 indicator. On the wick zones, you can see in and out barely, out the other side, back in and out the other side. Looks like we're trying to head back down to it. Somebody was asking me about semaphore trading and how they tried it. They lost some pips. First thing you have to realize is when the semaphore appears, it is an indication of a breakout. Okay. Now, one of the things you need to do when you're looking for a semaphore reversal, even off of a 3-ball, is you have to look for what I call pushes. Now, you can see here, I also have the TRO dynamic support resistance indicator here. And you see I have it set to 5 periods. That's like a 1-ball. Set to 34, that would be pretty much the same as a 3-ball. So if you look in here in the ZZ indicator, if you look at, come all the way down to the bottom here, the first period is 5, then 13 and 34. This is a 3-ball. So from here down, these are all the original inputs. All this other stuff are all my modifications. So you could set this to 34, or you can just leave it at 5 like I have on this chart. Now what you want to do is you want to look for what we call pushes. Okay, so you see here, you had horizontal dynamic support resistance. This is dynamic support. Okay, and you see here, price was pushing down, and so you see here, you have a new level of support. So you had a 2-ball here. So now it pushed down once, and you have to have at least 2 or more dots for it to be a horizontal support. And it pushed down again, pushed down again, pushed down again. There's a third. This is so here's push 1, here's push 2, here's push 3, and it looks like we're going to get push 4. So usually try to wait for 3 pushes before you reverse. That's number 1, because you can see here, if you didn't get that horizontal support, then it just kept dropping. So right here, could you have taken this trade and made a profit? Well, the other thing we sometimes look for is open above the mid dots, but we can put that to the side. So right here, you could look for a rat reversal or just any type of reversal. So if you went long here, let's say you went long, or you waited till it to cross this level, but you see it didn't, and it pushed down. So now maybe you waited for it to cross this level right here on this candle. Let me expand it so you can see a little bit better. So this candle pushed down, broke the high right here. Maybe you took that trade. If you took that trade, chances are you had a chance to exit. One of the things is, as soon as I see the 1-ball, if I'm in profit, sometimes I let the candle close. More often than not, I punch out with my 1 or 2 pips. So let's see, if your entry was somewhere, let's say you got in at the high, call it 86, you had a chance to get out high 87, 8, so you barely, you didn't even make 2 pips. But especially you see a 3 ball. So now it's pushed in. So here we go, right again. We've got horizontal support. Where would you go long? You might look to go long about here. And as you can see, price just moved the other way. And it's a waiting game. And somebody would say, you're going against the H1 candle color. Yes, you are. And that's why you have to be extremely cautious and you have to wait. And so we've got 18 pips, 50 percentile. This is where it's almost a coin toss. That might be where it's going to reverse, because if you can look here, you see 18, 14, 19, 26, 17. So 18 is pretty much in the middle over the past 5 hours with the current hour inclusive. So you might want to take that trade. You might want to wait and see if it puts in more. Now you can see here, being patient might just pay off. You got 36 seconds. You might want to jump in. You might not. You might want to wait. So right now is about the time where you need to make a decision. Sit on your hands possibly. Just wait. There you go. Now you'd be in profit. You see that 1 ball sitting there on the top right here. You might want to take that trade, punch out. And so what did we have here? We had a high of 83, high of 85. There was a couple pips to be had. So the other thing, what you're really looking for is, you see how price is dropping down here. Now price is starting to form a little box here from about here to here, with a couple of, feet sticking out of the bed type of things. But you can see it's kind of forming a box. Then it penetrated. Now you can see it's kind of forming another little box in this area. So what you want to do is look for price to break out of those boxes. And you can kind of look at where you see these horizontal dots. That's where these boxes are forming. And so you can see here, we got a box between here and here right now. See, between the 1 ball and the 3 ball. So that's what you look for. So I hope that helps you if you want to take these trades off using the semaphore indicator. But the main thing is remember, when you first see a semaphore appear, whether it's a 1 ball, 2 ball, or 3 ball, it means it's breaking out. So right here, it broke out of these last 1, 2, 3, 4, 5. It broke out and put the ball there. See, it just moved, it broke out. So the ball moved over. Some people think that's repainting. It's not repainting. It's actually updating in real time. But that's why if you use it in conjunction with the dynamic support resistance indicator I wrote, it leaves a trail so you can see where it was. So, fellow traders, that should wrap things up for today. If you have more questions about that, feel free to ask. I don't mind answering. And just remember, you don't have to trade. If things don't look right, don't trade. To trade or not to trade, that's the question. Because remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. And if you're new here, welcome aboard. Click subscribe, click like, share the video, click the bell. And this is the Rumpled One, over and out.